Alright, alright, guys. This is unorthodox stream. I don't know if anyone joined, but this is more for me, man. Like I said, man, I'm just gonna go back on my old trading videos and also mark them down so when I want to do this again, I can. Oh, this is not my trading account though. I'm gonna log into my actual trading account. Do I have my trading account set on one of these accounts already? Is it this one? Two. No, I don't have it set up. Continue with. Now I might as well. It's not that big of a deal. Alright. God damn, bro. My fucking eyeballs hurt. Everything. How the fuck is this guy so? What the hell? I don't know how that guy that's still able to do that. We're gonna go really what? We're gonna go live. We're gonna scroll all the way down. Actually, I think we can do this much simpler without constantly all this. Now we're gonna do that and stuff, and obviously we're gonna make sure everything is good. I don't know if I want to I'll probably put some music. I don't know. Just because I know damn well it might be a little bit of a boring stream. There's nothing exciting going on. Really, it's just looking back and shit. Really understanding what's going on with the market. It's just really understanding my trading career so far and how has it been, like how I've been doing, I guess. So yeah, I don't know if I'm more good on my first trade here. I didn't. That's surprising. Oh, you just gotta break. So this is our first trade ever. We're gonna mark it down, of course, first. Oh my god.
I don't think if I even can get in a, I'm gonna get in here. Oh, it says rejected. It says since the order halt, it's on a halt, so I can't even buy. So yeah, I was right. It's at a halt. And a lot. It start rejected from this level.
Damn, it starts going into a hole, bro. Look at this trade, bro. Technically speaking, if I knew what I was doing, bro, I would have gotten into this break right here at 626, man. Or no, even a little bit sooner right here. I would have got into that break. Damn, that would have jumped so hard. That's probably like 10 right here, if I'm really on it. Let's just say 610, bro. It went on 55 and then it went to a halt, bro. Oh my gosh, bro. I would have made so much better right there.
I'm not gonna lie. There was some opportunities there, but I did hesitate and I did get a little bit worried just because I wasn't 100% sure. But that's fine, man. I'm not trying to get in a trade that's gonna like kind of scare me off. That was we're here. They start rejected from this level. This is another trade that we're here taking. This one's a little bit more slower, but that's fine. Kind of respect this level, but it was from a big input and sense in this trade. To know I'm wrong. So right now I'm just looking at level 2 and stuff. It's at 46, 40. I'm still like around $5 if it hits it.
Did I get in this one? But how long ago? Like, how long was I in this?
Expecting it.
I bought it? But where did you buy?
Kind of weird. Oh, they did. Big. And like.
Okay, about right there.
And again, like.
I got it on 45, so if I do this correctly. Oh shit. Trade at 27. 43, let's just say. That's fair.
I got 488.
Damn, so
So if it goes down here,
I got basically on the retest on this, which isn't a terrible, but like there is really no move. Like what am I thinking is gonna happen, right? We're seeing it rejecting from this level a lot. It rejected again. You know, technically speaking, I mean, I guess it makes sense, right? I wonder how long I end up holding this trade for.
it's at 46.
I hold above 486.
Well, look.
What was it?
Oh!
That's not good news. Oh, that's really bad news, bro.
For real. Ooh, a lot of buying right there.
I forgot my headphones are so dog shit. I think this. I should have got right there. Get out, bro. Get the fuck out of there. Oh my god. Bro. Oh, it broke. Hey.
Oh, I'm out. I don't know. I can push it. Ugh. I just want to get in and out of the trade, bro. Cause,
Bro. Like, first of all, bro, you would have got stopped out, bro. Like, let's keep the stack. This should not be the trade that I should have been trading. I mean, it moved, bro. But like, what the fuck is going on here, bro? Like, what you're gonna have to be looking for, you have to be looking up for the new level, new high, and this just, oh my, even the pre-market was dog shit, bro. Oh gosh, bro. God damn it, bro. Overall, I mean, we made bread. I guess you can be. I think I made like 10 cents.
it did hit like and respected it, so I got a little bit out, a little bit.
I do end up showing you these trades, so I made 19. So I made 19 cents on that. That's just pretty good, guys. Not 19 cents like the money amount, but getting 19 cents on a trade per share is pretty good. I'll just go back. Trade number 2. There are some days that I did not trade it, so also, I don't know if this is gonna be one of those days. I'm gonna go full screen this shit. Oh my gosh.
The thing is, this one kind of does like scary, dude. Scary, that's what I mean. Like, I have control over it.
Okay, I buy right here. Okay. Okay, I buy on the retest. 228. I always get like a 2 cents different, bro. I might be tight though. 228, not terrible though. It's crazy. I didn't have a fucking stop loss back then, bro. Shit was. Oh shit, let me mark that down. Almost better. Okay, it was like a 26. So at 24, we'll say 10:24. Trade starts. All right. Trade at 10:24. Okay. Perfect. I wonder what I do here. I'm about to retest. It's not terrible. But if it breaks below, wow, that's a huge. Actually, 6 cents. That's not terrible. The volume is decent, bro. It's breaking. Can it break?
Oh.
Don't buy. Your best don't buy the market. Don't buy it again. You're on the wrong side. You're on the wrong side. In that moment, I thought I sold.
I got 46. Oh my god. yeah, look. I was trying to look to get back in. I'm like, fuck that. And look at that. Perfect. Just right on my stop loss, but I got out. Oh my god, bro. I didn't. Oh, fuck. Oh my
Chill, bro.
god. Yeah.
Bro, I'm so happy, bro. I did not sell, bro. Press the buy button, Goofy. See, I have 2 working orders.
So I didn't even sell.
Sell, Goofy. Just sell. Like, you literally hit your stop loss. You'll be fine. Just to make sure. 32 cents loss on a $2 on a stock of $2
Bro,
for.
what the fuck? I'm fucking sped. I didn't press the sell button.
Oh, bro, you're not pressing. Bro, your first purchase was 286, and then you would have got a 446, bro. You would have got a 4. That would have been almost a 20 cent. That's like an 18 cents. But on these type of stocks, on a $2, that would have been good, bro. That would have been good. Actually, I was not a complete noob starting this, but I was dumb, bro. Luckily now I don't fucking I don't press the buy button. I have a hotkey for it if I want to sell. I do still buy with the mouse, but I sell with the hotkeys because I found that way more easier and don't make dumb mistakes like that anymore.
Oh, all right.
Yeah, about right away. Hold on. I buy at a level at 290. Alright, let's say 46. Trade at 0 6 46, not 36. Alright.
190. Yeah, 192.
Go.
Looking at this resistance.
Dude, it should have bounced off quickly.
Dude, that one was such a bad. I saw a 10 cent. Like, dude, selling
You're not seeing.
sold.
This is what. Yo! Where did this start, bro? Nah, July was a weird fucking month, bro. What the fuck is this? I personally wouldn't even know how to trade this, bro. I would have waited for the breakout. I would right here. Yeah, look, yeah, that shit mad weird. I wouldn't trade that. I'm gonna keep it a stack. That's not a good stack to trade. I don't think if I get on another trade. Oh, I do get on a second trade. I'll say 49. I'll say 40. Alright, whoops. Trade at 18. What the hell? 1840. 49, right? I was gonna say, boom. Oh, this is second trade. Second trade out. Boom. Make sure that still looks good. I don't even know, bro. I'm gonna keep it a second. Why did I buy there? Just because it just hit right here. Like, come on. Oh! Bro, yes, bro. That's what's gonna happen because there's no fucking trade idea there. There's nothing. The stock is actually wonkers. This would have boom. Oh yeah, like look at that shit, bro. I'm gonna keep it a stack. This shit man look mad weird. I'm gonna see what I was wrong. I was net lost 15 cents. That's not terrible. I had 3 trades. What was the other one? took a third trade. All right. I didn't even know I took a third trade. Third trade at now I'm looking for how to, oh my god, my brain. Oh. 3 trade. But I'm looking for what the fuck? Hold on. No whiff. Third. Right? Yeah, third. That's how I spelled it. Third. Why is it saying I spelled it wrong? But why does that not look right for some reason? I don't even know, bro. Oh, I don't really care. I gotta do this quick either way. There, sell. There you go. Hey, miss some bands. There we go. Dip and buy. We have been doing these, but just personally wouldn't have done that. I would have done that on like a big impulse. Like this one, bro. You see a big drop. May want to buy around this level. Or may push a little bit further. Or maybe it would push. You would have bought at this level. Boom. And then, oh my gosh, next candle. If you hold above, it might take it and. If I had the 90 MA, probably would have. Like I said, bro. Either way, I had 3 trades this trade, bro. Shit's crazy. Fourth. I know these are gonna take a long time, bro. I'm probably gonna do some for sure, but for sure I want to do these because I know for a fact when I want to come back and check my old trades, bro. I don't want to be fucking take forever. I want to make sure everything is up to date with my trades.
See what happens. I don't really trade the open. It's super hot.
Yeah, no.
Oh my, look how fast.
I do buy right here. All right, trade at 350. We'll say 3. Oops. There we go. Oh, my leg. You take a second trade. I'll see. What is it? 50-50. Let's see. 50. Boom. Comment. You know what we're gonna do? We're gonna just see what we get the trades, and then later, we're gonna actually come back and look at our old trades. But right now, what we gotta do is just mark them at least, bro. We gotta at least mark them. I think that's the least we can do right now. Yeah, you just stay long in the charts. Why would I want to buy that? I'm not gonna lie, that would have been bad. trade. It looks like no trade. Let's help. It's 5, 6. I know it's gonna. I'm gonna see how much we can kick out, bro. Did we did this one? Nope. We were looking at this one a while ago. Did we do any trades in the beginning? Oh, just one time right here. All right. We'll say 25. 525. Trade at 525. Boom. But we're gonna knock these off quick, bro. A second trade we took? Oh no, this one we get out. The second trade. So 6, I'm going to 7. Alright. Oh. Dude, I had to do this last. Not last time, but I had to do this very quick. Equivalent to one trade. Oh, we made 22 cents on it. Honestly, that's pretty good for this much. That's actually pretty good. I don't know if I take a second, third. No, it doesn't look like it's 5 cents, but that's when I used to show my trade. I mean, I'm still recent, but I stopped doing that shit. Trade 8. All right. There you go. The market has opened. Fine. My quality gets better at like day 7. Oh, I did trade right now. Okay, I do trade in this one. I just want to see, where do I trade at? Where do I trade? Right here, around right here. Trade at 10:43. Comment. Great. I took another trade around here. Do these not show up? Oh, the audio is... No, the audio is fine. Oh. The second trade. Second trade at 12.99 now. 59. And that is it, bro. How many trades do I? Okay, it says right there different. I made the 34 cents. One I lost 8 cents. Another one I made 42 cents. Which, dang, that's insane. From how much does that cost? How much did I buy that for? I sworn I seen that stock before again. B. Oh, it was at $8. I mean, that's still pretty good for that price of the stock. Let's keep it stack. Popular. Well, not popular. Was it 8 that we should look at? Was it 9? What's this one? W trade. Okay, that was it number 8 that we did. Yeah, okay, we're gonna. That was 8. Now we did. Now we gotta do number 9. You see that? Now that might break down. It did. Or click something else. Trade 9.
Is it a
Alright. 704. Comment. Ugh. And I'm pretty sure that's the only one try I take. I think I did it. Oh my god! That was a whole $1.84. Drake. Dang, that was almost $2. But that's an amazing trade. Wow, we're gonna definitely have to look over that one someday. That honestly was a spectacular trade. That was actually a really good trade. Props to me for that one. Forgot I used to do those. I don't do that shit.
Yeah. Alright. I mean, like a few seconds left until the morning bell. But yeah, like I said, I'm gonna wait 5 minutes to see what happens. See?
No trade. Damn, bro.
Oh. Dude, my room feels so cold as shit, man.
For when was this? August? Bro, it was not cold outside. You tripping. 11 now. I know, bro. We're going fast as fuck.
No opportunities.
Let's see if you see any right now. I had a trader. This is where I sell. Alright. What the fuck? Oh. But what's up with these so many lines? Holy shit. Oh, they're probably like from another day. But trade at 41, 13, 41. I think that's pretty much it, man. So one trade I took. Was the one trade I took today? Yeah. Oh my! I lost $1. What? That makes no sense. 221 to 214. 15 shares. How would I lose $1 though? Huh? That doesn't make sense. Only that's $3. Yo, what did I do? What the fuck? Oh, I said, oh, 15 shares. That's how 15 shares, 15 shares. I'm goofy. Alright. That's not even that bad, bro. I lost 6. Oh, shit. No, that's bad. 10. 6, 7. I don't know. I think that's pretty balanced, I guess. I don't know. But we're going to go to 12. You know what's crazy, guys? We're in cancel. Yeah, close player. 12, bro. We should go to 20, bro. I'm gonna go to 20. I'm GG, bro. I'm tapping out. Pause. 13. Check. I need to do testing. I don't even know why I have those still up. 12, but there's so many much more, guys. Look, I'm all the way to the oldest to the newest, latest. I'm all the way to day 171. Guys, look, day 1 was July something. July 17, man. That shit was crazy. July 17, bro. Right now we're in April. Keep that in mind, bro. We're in April, guys. We're in April. Meaning, I think May, June. 2 more months. Yeah, like 2 more months. Yeah. I have traded for a year already. And to be honest, bro, it was a rocky ride, bro. I'm gonna keep it a stack. I'm glad I'm keeping a track, bro. I started from 0, maybe 1 sub to 5, bro. I'm really blowing up in the world, man. I will do more, but I'm gonna lie with this tires. With 11 o'clock, I don't want to be streaming. How long will I be streaming for? Like 30 minutes? That's not even that much. But still, I mean, there's nothing really much, man. To be honest, I don't know if I should take notes. I wouldn't mind taking notes. I don't have a video I want to watch. It's to buy the dip. I wonder which is oldest video. Honestly, that's pretty sick. This most popular video have 10 mil. The ultimate guide. Damn, bro, 10 million on that. How do trade alarm works? How I turn 1,000 into 8,000 in 1 month? 2 mil. I don't know if anything recent, but these are years ago, man. 5 reasons why I traded lose money. Damn, bro, it's a lot, bro. What unexpected huge win Ross Cameron recap? 5 years ago, bro. I started trading around, not actually trading, but learning about day trading around 2021. Around, I keep saying around, bro. Basically the New Year's, man. The New Year's. That's when I really started taking shit serious. And then a little bit I learned about day trading around that time. I won the aerosol. That was what, like 3 years ago? Oh, they got 4 like 4 months ago. They got 4 mil on that video. Hold on. Yo. Bro, I didn't know trading was still kind of popping like that a little bit. What the fuck? I don't know, man. Oh, dude, this video like gives you perspective, bro. 50T crane in 17 days. What the 500? Yeah, bro. I don't know how the fuck, bro. But this is basically where I got the idea of how, because he does a cash account, and that's where I got an idea. Shit. But the video I wanted to see from him. The latest. I gotta watch these. Which one? Where is it? I just posted it. What the fuck? Which is like, where's the buy the dip one? bro, what did he delete it, bro? Was it like was that like a cheat code video or something? And he was just like, nah, bro, you ain't getting that or some shit. Oh, this one's right here. Okay, I didn't watch it fully. It says dip trading was hard until I learned. This is something that's really important that I need to learn. Was dip trading something that I started getting into more. You guys know this. Just all I did it today. But yeah, dip trading is pretty useful. Buying the dip and then buying the strategy I'm used to. But buying I'll be such a demon trader, bro. I need to learn how to buy the dip. This is the video I do gotta learn and watch.
Buy on blue, sell on red. This new indicator gives extremely accurate.
It's extended. I spent the first nearly 10 years of my career never buying dips or pullbacks, but only doing break.
Like we won't watch it, bro. Another study session too, a little bit in this trading, bro. Add a couple little different things here and there. And shit. It's now it's hot as fuck in my room, but fuck it, bro. I gotta trade all this. I gotta lock in. Oh, I need some water, bro. Fuck. Oh. Yo, I'm gonna get some water. Oh. I need some water. Oh. Oh, another session. A little late night. I used to do this a lot. Man. Oh, well, not a lot actually. I can't really remember. My brain's dead right now. Oh, please don't tell me. Oh, okay, it's not. It's not. I remember I used to do these. Well, I remember one time on vacation. What's it called? At night, I went to study instead of going to sleep, and I was learning about VWAP from this other trader named Humble Trader. But I'm not used to these, bro. I'm not used to these late night grinds, bro. It's been a minute. Oh my, it's been a minute that I used to do these, and I mean late night grinds. These are not even late. Like, I mean, I was up like, oh, blood, at 1 a.m., 2 a.m., not trying to flex or anything.
Breakout. And the reason I did that was because, for me, breakout trades were pretty much and are instant resolution. You get in, they either break out immediately and you've got a winner, or they don't and you stop out. And for me, that felt good. And one of the challenges that I struggled with in a huge way was that whenever I tried to buy a dip or a pullback, the price just seemed to go lower. And I felt like I was just losing. Implementing these, when we're sitting here and this is the information we have, right? Let's just say we're sitting right here, we're going just candle by candle, and we're thinking, all right, price is moving higher, now it's pulling back, what do I do? Right? And this is where a lot of us have paralysis and panic. We're like, I don't know, it's extended, it just went from $9.80 all the way up to 12. Should I really, I don't know, should I buy this here? Should I buy this dip, or is this just gonna go lower? And then you talk yourself out of it, and next thing you know, it's up at 13. You're like, oh, I just missed the whole thing.
Yeah.
So how many of you can relate to that? If you relate to it, you're not alone. I did the same thing for a long time. And look, Sometimes I'll even do the same thing today. As a trader, we are ultimately trying to predict the future. And the traders who do it the best will be the ones who make the most money. So what we're doing is we're seeing only half the pattern, right? We see the beginning of the pattern, and we're now trying to visualize how it's going to resolve. Is it going to resolve to the upside? Is it going to resolve to the downside? Okay, so the first trick that I'm using to help me understand whether or not this is going to be something that does a complete reversal, we'll sometimes call it a round trip, or is something that's going to continue higher. Number one, we're going to start making a list.
All right, bad.
Right.
Number one.
Number one is I check the volume profile. Now, as a beginner trader, you most likely have volume on your chart, but it's very easy to kind of overlook it. And in fact, some charts, for whatever reason, don't even differentiate the color of the candle. Now, as a beginner, the volume, the color of the candle, the color of the volume bar based on the color of the candle. Sometimes they'll just all be, like light blue or something like that. So then, you sort of see the volume like this. Just, it's almost like an afterthought. Like, oh yeah, I guess we should throw volume on there. And I'm not saying you did this, but like whoever made the charts for you, the provider using. But they're not, this doesn't give you what you need. So let's go in here and change this back. So falling is going to be red, right? Growing is going to be green. Falling. Okay. So this is the profile that I look at. I always want to see that volume is increasing as the price is moving higher. That's the first step. Volume is increasing. So this is the profile that I look at. I always want to see that volume is increasing.
Okay. You always want to see. Okay. You always want to see if the volume is increasing
as the price is moving higher.
As the price is moving higher. All right.
That's the first step. So number one, so we'll do A, increasing volume. So in contrast to increasing volume, what we sometimes will see, and this is from something I was working on yesterday, for taxes. That's another episode that you guys should check out.
Let me see it. God dang.
For taxes. That's another episode that you guys should check out, for those of you who have not seen it already. So if we had a chart where the price was moving up, we'll make this candle. All right, so the price is moving up here, like this, but the volume bar was steadily declining like that. This, for me, is a little bit of a red flag, because I'm like, on the one hand, I'm like, yes, the price is moving up, but on the other hand, I'm like, fewer and fewer and fewer people are interested in buying it. Why is that? It shouldn't be like that. In fact, it should be the exact opposite, where we see lighter volume as it starts and volume increasing as it goes higher. That's a really good volume profile. So anytime we see a sort of divergence between indicators where price is going up, volume's declining, for instance, or we have one of our other technical indicators like the MACD. The MACD has gone against the trade, but the price is still moving higher. I consider those to be sort of like caution flags. And it's really important to be able to be aware of them, but it's difficult for a lot of traders, especially beginner traders, to keep track of all these things. So the goal here is that we can simplify it into a few steps that you can check, and you can do that every time before you consider taking a dip trade. So the first thing you're going to check is the volume profile, and you're going to look for increasing volume. That's step number one. So that means we want to see the price moving higher and the volume bars also moving higher. So these should be correlating. They should be basically doing the same thing. And if we look at our chart here on Brent, we see that's exactly what happened. The price moved higher and the volume moved higher as well. Okay, so this is great. This is what we like to see. Now, when we start to get the pullback, as this candle is forming, I am watching the volume very closely. What I do not want to see is a high volume selling candle. So if this candle, for instance, was red all the way up to here, that would tell a very dramatically different story to me. What that would be telling me is that there was light volume on the move up, and then when selling came in, there were not only buyers who were dumping their shares, there were probably people shorting or maybe insiders selling as well. In any case, what it very clearly communicates is an imbalance between supply and demand that's stronger to the sell side. So what you have right here are 4 candles of green volume accumulation, and now you have a light volume selling candle. So if you just looked at this volume profile, if this was all that you had to look at, just for instance, I hope that you would be able to see that the imbalance is stronger to the buy side.
The stare.
In fact, if you only looked at this volume profile and not the chart, let's see what we might think is happening. So we have a little bit of selling, and then look at that. I mean, I know you've already seen the chart, so you could probably visualize fairly easily what happened. But look at this volume, right? This is telling us a huge story. Look at the peaking volume right there. 850,000 shares just in that one volume, just in that one bar, right? Now, this is interesting. If we're really analyzing the volume, I would say, based on volume profile alone, we've got the nice move up, light volume pullback, starting to move higher. This is where you sort of get that next wave up, right? Most likely.
So I guess you want to see that light. So basically, we're saying I'm gonna write this down just point. So after after you see volume increasing, you know, what we want to see next is light red. So, okay, so I'll write this down if you can write it myself. You want to look at the volume bars. What's it spell that weird? Bars. And see if the red candle has a light, I guess small. I'm gonna put light slash small. Light slash small red volume candle. Oh no, not candle, bar. My bad. And then I'm gonna put an example. So this would look like this. So from this one, like color in. Look, I'm drawing it so like it'll be easier. So I recommend you guys to draw what you guys are doing to make it sure it looks presentable for you and it makes it easier to understand. No way, bro. My red one doesn't work. Or like, there's no coloring. Do I have another one? I don't know if I have another one, to be honest. No. I just need a red. And red coloring. A red coloring. So the one I have broke. The tape broke. I don't think I have a sharpener either. Bro, hold on. I'm gonna go in the back real quick. See if I can find one real quick. Oh. couldn't find a sharpener or another red color pencil, so we got something else. I don't know what it is, but it is red, and so we're gonna use this instead. Fuck you. We're gonna use this instead, and we're gonna color this in. Alright, we're gonna color this in. It's a nice red. Does it smear? Oh, it doesn't smear. Oh, this is pretty good, bro. It looks pretty damn good. Yo, this is pretty sick, low key. I'm gonna get the green one. I'm gonna start using these. What the fuck? It feels so smooth. I'll be right back, ladies and gentlemen. I found a green one, but it's like a weird color of a green. It's that green and it's all of it. Didn't even tell you the color, bro. Spring green. This one's spring green. And this one just says green. And I'm with the I'll just use green. I don't want to find it. Alright, green. We have a green and red one now, which we're gonna. We're not gonna lose this one still, but now since we have a good replacement, we're gonna do that. So make sure you guys write down. I'm gonna repeat it again and say you want to look at the volume bars and see if the red candle has a light/small red volume bar. Boom, perfectly set. It feels so smooth using it. It looks sick. Alright, perfect.
A little bit of a pullback, a little bit maybe a chop right in here, a little pullback, but the selling volume is still very light on these red candles. And then it surges back up, right? Now, it's possible that we could look at the chart and see that it was sideways right here. And if we saw that, just for instance, then that would again be where we have a bit of a divergence. And what that would communicate to us is that although there's a lot of buyers, the price is not moving substantially higher, which means there may be what we call hidden sellers. A hidden seller is an iceberg order, and what it looks like when you're actually in a trade is you'll be looking at the level 2. You've got the bid, you've got the ask right here. Let's say it's 915 by 925, and on the time and sales window here, you're going to see tons of orders going through in green, and you'll see maybe like a 5,000 share seller here at 925, and you'll see orders going through here for 5,000 shares, 10,000 shares, huge orders going through. But this is not changing. What that tells us is that that order right there, they're displaying 5,000 shares, but it's an iceberg, which means behind that, who knows, they may have 100,000 shares that they're selling. And this is something that big traders, especially at proprietary trading firms, prop firms, and also professional day traders, even traders like myself, who are using the right software, we can choose to use iceberg orders. This is allowed because in the market, if you show your full size and you tip your hat to the market that you're trying to sell 100,000 shares, for instance, it could hurt you. It would hurt your own position. So you're allowed to protect yourself from other traders sort of seeing how much you're selling by hiding some of your shares. Now, you can't do that with Robinhood. You can't do that with Thinkorswim or Webull. You can really only do it with brokers that are designed for professional traders who trade with multi-million-dollar positions. So,
Yeah.
anyways, there's a possibility that the price could stall out here in terms of upward movement, and that would be indicative of a hidden sell. Well, let's just assume here that the price went higher. Then we get a little pullback on light volume selling, a little more a couple green candles, but lighter volume. And this is where I would say we're beginning to see a little bit of a shift between supply and demand, where we're seeing more selling. Now, if we step back for a moment and think kind of high level about what's going on this chart, and this is like getting into sort of the psychology and the dynamics of what moves the market. You have typically a catalyst. There's some type of news that has brought traders onto this chart. And it doesn't matter if it's futures, if it's a commodity, if it's a forex pair, if it's a cryptocurrency, or if it's a U.S. equity stock or a stock anywhere in the world. There's some type of catalyst that's gotten people interested, and initially they start buying, and that's where that early green volume comes from. Those first traders who are looking at this who are like, I like this.
I made over 6 figures trading without even looking at the chart.
Man, such your
Without
bitch.
spending hours looting.
Okay. Oh shit.
It's extended. It just went from $9, $9.80, all the way up to $12. Should I really? I don't know. But this is not changing. Have typically a catalyst. There's some type of news that has brought traders onto this chart. And it doesn't matter if it's futures, if it's a commodity, if it's a forex pair, if it's a cryptocurrency, or if it's a U.S. equity stock or a stock anywhere in the world. There's some type of catalyst that's gotten people interested, and initially they start buying, and that's where that early green volume comes from. Those first traders who are looking at this who are like, I like this. And then after that first wave of buying, some of those early buyers decide to take a little profit. Some people who maybe have been holding for a while decide to take a little profit. Some short sellers decide to take some positions. And now the question is, does all of that selling exceed the amount of buying that we had? Because if it does, the price is going to swing way back down. And you'll have what we sometimes call a round trip, where the price could go up and then come all the way back down. But if the price doesn't go all the way back down, then what it tells us is in that moment in time, there were more buyers than there were sellers, and the supply-demand imbalance is to the buy side. And then what happens is other traders will see this, whatever it is, stock, commodity, forex pair, cryptocurrency. They'll see it and they'll realize, wow, this thing is moving up and it's holding up. So now what you have essentially, and I kind of call this a wave, you have this wave higher, a little pullback, and then that sets up for the next wave up, right? So now you have the profit taking, the little bit of pullback down here. These would be red candles, a little profit taking, and now it balances. The supply demand imbalance as of right here is still obviously positive because we went from a low price to this high price. And now we're coming in where the next round of traders are like, I'm going to buy this, buy this. Short sellers may stop out, realizing this thing is strong. And all of a sudden you get this next leg higher. And that's what usually is correlated with higher increasing volume.
Yeah.
That increasing volume is because of early shorts who stop out, they buy to cover, and long bias traders who jump in to establish new positions on something that is strong. So we're typically, we being long bias traders who are trading this type of trend, we're buying these pullbacks. Now, when I first got started, I wasn't buying down here. What I was doing was I was just buying basically the breakout right here. So I was buying the high a day break. As soon as something broke high a day, I would get in right here. And you know what? That was fine for a long time. And it's still a fine strategy today because it's instant resolution. You can get in, you can get out, you pretty much get the breakout immediately. But there's a little bit of a challenge with it. And the challenge is that you're getting in a little high, right?
Yeah.
Relative to someone who maybe bought down here, like I might today, you might even be buying their shares, right? If you got in low enough, you could be taking profit here. Now, if it goes a lot higher, you might feel silly for selling. But nonetheless, buying up here is not your best entry. I would say that this is an entry that has confirmation. And when you ask for confirmation, you pay a price. Confirmation is the stock or the chart is making a new high, but you pay a price by getting in at the higher price. So when you get in down here, you don't yet have confirmation that it is going to make new highs. You think that the wave is starting to curl back up. You think the dip is going to move higher. You've done your volume profile, which was step one. You checked to make sure that we had increasing volume. And number two, you made sure there was no high volume selling. So this was increasing volume as it was ramping up, and then no high volume selling on the pullback, right? So you made sure there's no high volume selling here, increasing volume on the move up. So check volume profile you like. Now there's another step that we're going to go over in just a moment. But you say, okay, I'm going to get in here. You don't quite have the confirmation, right? So it's a little bit of a higher risk position, but that's offset by the fact that your max loss is the low of the pullback. So if you get in right here, where would you logically stop? You wouldn't hold it if it goes all the way down to here. No way. Why would you do that? You sell at the low of the pullback, because if it can't hold those lows, you get out. So rather than buying something as it's actively dipping right down here, I'm waiting for these first early signs of the wave kind of shifting from pulling back to moving back in. I'll show you what those look like in just a moment. So when we get that, that's where I'm getting in. Stop is right down here. And then as it comes up to this level, I could choose to add to my position, which will give me a cost basis right around here. And then I've got twice as big of a position as if I had just bought at the breakout. And then if it does break out and moves up here, I'm going to make twice as much money. And that's literally what I started doing. So what happened in 2020 was we started seeing these really dramatic moves in price. And we kept seeing, I think it was just the exuberance that there was in the market. We would see these huge moves to the upside, and then we would see dramatic pullbacks, and then it would rally all the way back up. And because these moves were so elongated, because they were so stretched out, it felt like, you got this move up, the pullback, and then to get in at the very top back up here for the breakout, I mean, you were getting in like $2 a share higher. It just felt like we're in way too high. And so I started, as I would see it beginning to make this curl right down here, that's where I was like, okay, boom, I'm getting in. And then I started to figure out, okay, some of these are not working. And what is it that's the issue? And so the first step, of course, is analyzing that volume profile. Okay, so step one, analyze the volume profile. Now let's back out of this for a second. We'll go like this. We'll go back to full screen. Sorry. All right, so now we're dialed in here. So we had our first few green candles right here. Two candles of light volume selling. Okay. And then what happens is we come down to the support of what you see in this case is our 9 exponential moving average. So I always want to see price at or above, put it on the whiteboard, at.
Bro, I was just talking about earlier today, bro. Remember? I was talking about earlier this today, bro. Oh, mom. All right. Let's want this.
Always want to see.
Say always want to see. All right, gonna put this down. Is this 2? I don't know if this is number 2. Okay, we'll do that 2 that we're here. 2. So always want to see
price at or above.
Price at or above.
Put it on the whiteboard. The 9 EMA.
9 EMA.
And it's on the 1 minute chart, 1 minute time frame. So price should be at or above the 9 EMA. If the price breaks below the 9 EMA, then this to me is a more sustained pullback that I don't like. Now, it's not impossible for the...
All right, we're gonna draw this down. This is very important. So basically, draw this, right? The 9 EMA. I don't know if you guys know about it. If you guys don't know, watch a video on it. Watch a video. It's the exponential moving average. It's the previous 9 candles, and it just gives you an estimated price of range, I guess you can say. So draw it down. So what I would draw, basically 3 candles going up or 2 candles. Usually I see 2 candles. I'm gonna draw what I usually see. This is an example. Oh my god, I'm gonna put this over here. Example. So I'll usually see 3. 1 huge candle and 1 little like tap here, and then a little pull back. This is now let's draw this, of course. Green. It's gonna be red. Here with the phone. All right, there we go.
the price to dip below it just for a second and come back up. That'll happen sometimes if a big seller just presses the sell button, you get a little flush. But if it just sustains that and keeps going lower, that's no good. So generally I want to see it holding right around the 9 moving average right here. And we got that. And my cue to enter, I'm looking here, 1, 2, 3, 4 green candles in a row, 2 light volume red candles, first candle's green. Okay. Now there's one other thing I checked, and that's the MACD right here. I checked the moving average convergence indicator, and I want to see convergence divergence indicator, and I want to see that MACD is open. Open is when the average is above the signal line. So you have the moving average line right here, and then you have the signal line, and you want to see that this is above the signal line. When it crosses below it, then that's usually when we're coming into a period of consolidation. This has been a real game changer for me, especially trading through the bear market of 2022 and 2023 to help me stay out of trades that most likely were going to fail. So anyway, so we have this pullback here.
I'm gonna keep it a stack. I don't use the MACD, but I might have to start using it. Hold on. I don't know, man. I don't know. I might have to start using it. I keep it. That's a lot to look at. Listen, I don't know. I gotta see if it's worth it. That's a lot to look at, bro. But I'll see, bro. 100% though. MACD. I'm gonna keep that in mind.
Right here, MACD is open. We're above the 9 EMA, right at it. That's fine. Volume profile checks out. this is a place where I'd be buying the dip. And so what I would look for on the level 2, before I take the trade, excuse me. So I would look for the price moving up, like this. Then we get the sell-off. 1, 2, say 3 candles, doesn't matter. And then what I'm looking for, we've got our 9 EMA, right? We've got that. Our MACD checks out. I'm looking on the level 2. The level 2 window, we've got the bid, we've got the ask, and we've got the time and sales. I always have my time and sales right next to it so I can see these orders. And what I'm looking for right here, again, let's just say 915 by 925. I want to see we've come down, we've sold off, and I'm looking for green on the tape. I want to see all of a sudden a burst of volume. That's to the buy side. For green on the tape. See, we've come down 915, see these orders. And what I'm looking for right here, again, let's just say 915 by 925. I want to see.
So, should we do this on the next page? Yeah, because I feel like I won't have enough space for this one. Should we do it in the back? Yeah, I'm gonna do it in the back just so we keep everything together. Page. Just do that. Okay. I want to see. I want to see.
We've come down, we've sold off. And I'm looking for green.
Looking for green on the
On the tape. I want to see all of a sudden a burst of volume. That's to the buy side. Those transactions are going to be green because they're occurring at the ask price, which means people are executing their orders at this price, which is bullish. When people execute their orders at the bid price, it indicates weakness, and those orders. When people execute their orders, which means people are executing their orders at this price, which is bullish. When people execute their orders at the bid price, it indicates weakness, and those orders appear in red on the tape, the time and sales. Now, I will also add that I prefer,
I'm gonna put
which
that.
means people are executing their orders at this price because they're occurring of volume. That's to the buy side. Those transactions are going to be green because they're occurring at the ask price, which means people are transactions. I want to see all of a sudden a burst of volume. That's to the buy side. Those transactions are going to be green because they're occurring at the ask price.
So we want to see. Okay. Also want to see a lot of people buying at the ask price. Alright, so let's draw that. And we're gonna put an example right here. This is this. We're just gonna be big green candle. Wow. It's a big seller. Hold on. This shit look mad goofy. So you're drawing this, guys. 15, 9. This shit's true, man. This shit takes a while, guys. Drawing, you have to be. I'm gonna make sure we put that at 9. This is the 9. MA. Make sure we write that down. Go. Go. Blue. I mean green. Green. Boom. I just want to see a lot of green. Green on the tape.
Which means people are executing their orders at this price, which is bullish. When people execute their orders at the bid price, it indicates weakness, and those orders appear in red on the tape at the time it sales. Now, I will also add that I prefer to take entry near half and whole dollars. So I know that there is a significant amount of psychological resistance when the price is approaching half dollar. You see this all the time. So I'm going to kind of simulate what this looks like approximately. This isn't going to be perfect, but you'll get the idea. So let's just say this is 5, this is 550, or well, I guess we said 9. So so this is 9 here, this is 950, this was 850, this is $8. So the price squeezes higher. It hits resistance at 950, which is at the half dollar. It pulls down here.
So let's write down.
So this isn't gonna, this. There is a half and hold that I prefer to take entries near.
That's 4. So I prefer to take entries near, oh, whoops, near, oh my gosh,
Half and hold.
half and whole.
Dollars. So I know that there is a significant amount of psychological resistance when the prices of approaching. $half. We see this all the time. So kind of simulate what this looks like approximately. This isn't going to be perfect, but you'll get the idea. So let's just say this is 5. This is 5. I have 50, or well, I guess we said 9. So this is 9 here. This is 950. This was 850. This is $8. So the price squeezes higher. It hits resistance at 950, which is at the $half. It pulls down here, and let's just say dips to like basically 9, and then this is where it starts to bounce back up, right off of $9. Psychological support. The closer that I can get in to $9. If this is also right at the 9 moving average, we have now 2 elements of support. We have support at the psychological level, which is the whole dollar, and we have support near the 9 moving. What we'll sometimes see happen is the price will test 9, and sometimes it'll actually dip below 9, and you'll see a little burst of selling. That burst of selling is usually early traders who got in too early on the dip who are bailing out. They're like, oh shoot, it's breaking $9. I gotta get out of this thing. And I actually like to buy in those spots because what often happens is if it can reclaim 9 and hold above it, then it's really a good indicator. We broke below it, but we immediately got back above it. So now I'm executing a buy order down here at like 898 or 905. And I'm doing it because I'm seeing some green on the tape. Basically, we drop and we immediately pop back up. Now, if, just to elaborate on this a little bit more, we came down to $8.95 on the bid, and I'm like, okay, I could buy the dip here, and at $9 there's a 100,000 share seller on the level 2. No, I'm not gonna buy, right? Clearly there's a huge seller dumping shares. So whenever I'm looking at these dips, I am naturally going to be checking the level 2 to confirm that we do not have huge sellers that are blocking the way. So I guess number 4, I could add here, check level 2 for big sellers. And this is more of like kind of a bonus. And then another bonus is the preference for entry at half and full dollar. Or and then another bonus is the preference or sellers here, check level.
Okay.
Level 2 for big sellers, and this is more of like kind of a bonus, and then another bonus is the preference for entry at half and full dollar.
Damn, bro, this is a big one. Pause. See you.
I find that those are some of my better entries. All right, so this is sort of like preference. I'll obviously checking the level 2. So anyway, so if the level 2 only shows, a 1,000, 2,000 share seller, no big deal. Okay, so I buy that. I'm then in, and then sometimes I'm in very early. I'm seeing some of those green orders, and whenever I'm taking that kind of dip entry, my stop is right at the low here. Right, whatever the low of this candle was, that's my max loss. So there are times where I will take a starter on a dip. I'll get in at 9, it dips down to 95, and it sell, and I see more red going through on the level 2 on the time and sales, and I'm like, I'm early, I gotta jump out, and I'll get out, maybe for a 5 cent, 7 cent loss. Usually those losses are less than 10 cents a share, which is not that bad. Okay, so I'm okay with taking a couple of small losses if I have to, if I'm trying to do this type of trade. And then because I'm trying to time my entry, knowing that the earlier I get in with a really tight stop, ultimately the more money I'll make if the trade works. So I don't mind taking a couple stabs as long as everything checked out that we already discussed. Volume profile, price above 90 MA, MACD open, and the level 2 looks good, and especially if it's near a half dollar hold up. So then what happens is I'm in down here at 898, and as we get this green candle forming, I'm like, okay, I feel like the tide is starting to shift. And as soon as we get our first candle that makes a new high there, I often will add to my position. So I'm not the type of trader that goes in to dip trades ever with just full size on the first entry. I never do that, because dip trading, it does carry more risk. The success rate is lower, but the profit loss ratio is higher. And this is important. So when it works, they work really well. You get that move all the way back to the high, but you are buying into a bit of weakness. You're using these steps to help you take the best entries, but there's still a little bit more risk of it failing than the obvious breakout trade, at least in my experience.
Yeah.
So I don't go in with full size ever. I take a starter position, and then I add as it starts working. So I always add to my winners. I don't want to add to my losers. So if it goes lower, I want to cut the loss and get out and get back in if I see another setup. But if it works, I want to add to my winners. So I take a starter at 898, say for instance. I add at 915 up here, maybe 925. So now my cost basis is $9.10 approximately. It squeezes up to 935, 945. I now am like, look, I could add another 1,000 shares, maybe 1,000 starter, 1,000 add. I go up to a 3,000 share position, adding at 950. So now my average is like, let's just say 918 or something. And it squeezes up here right to 975 into $10. So now with 3,000 shares from 918 to 10, I'm locking up, 80 cents a share, $2,000 winner. That's a really solid trade. And this was on initially a 1,000 share position at 898, where my max loss was like 10 cents, $100. So what do you think about that? Risking approximately 100 to make 2,000. That sounds like a great profit to loss ratio. And it is. So even if this is right, even if you were successful on this trade only 50% of the time, let's just say, you would still be very profitable. Now, with 50% accuracy, as long as your average winners and average losers are the same, you'll be break even. So even if you only made 100 on your winners and lost 100 on your losers, you'd be break even. So making 2,000 on the winners and 100 on the losers, this is losing 100. That's great. That's terrific. It's a good profit loss ratio. Now, I'll say that something that's important for mitigating risk is making sure you're trading the right stock. So at least for me, because I'm trading stocks, what I think is important is that you're trading something that is obvious. So if it's cryptocurrency, it's a forex pair, it's futures, commodity. You want to make sure you're trading something that's obvious, that has a lot of volume, because that is what's going to create that strong resolution. So ultimately, being obvious usually means you need a catalyst. You need some type of news that's bringing in the buyers. So that's an important thing to be aware of. If you try to trade, like this on the S&P 500, E-minis or something like that, you're not going to find good success because you're just going to get chopped up. So this is really a strategy more designed for trading something that has news, that has a catalyst, and that we're looking for the next leg higher. So now let's jump onto this chart and kind of apply what we've talked about here in this example. And I've got another example that I'll show you too. Okay, so, and by the way, this is something that I also refer to as a micro pullback. It's a micro pullback because this is on a 1 minute chart is only like 120 seconds of pulling back. It's very brief. So I'll put a link to my micro pullback strategy PDF. It'll be pinned to the top of the comments and it'll be linked in the description, and you can download it, print it out, and it's going to have everything, that I've kind of been laying out. A lot of what I've been laying out here, and it has some other
pretty
stuff
much basically almost the same concept.
So you might want to check that out. Download it and use it in your trading. Okay, so we had this move up, we had this pullback, and then hopefully, as long as the level 2 checked out, everything else looks good. The volume is good, the MACD is good, and we're above the 90 EMA. So everything checks out there. We get this nice move up, 4 green candles. This is the spot where I would have been taking a starter potentially. And look at this. This actually bounced right off the whole dollar of 11. So maybe a starter at like 11.05 with a stop at 10.98. Adding first candle to make a new high was actually at 11.70. So that's 70 cents a share higher. But look, if you had a starter down here, you're up 70 cents a share. So you could add there. The high a day is 12.10. So let's say maybe you added over 11.50. When it bounced over 11.50, you're like, okay, this looks good. I'm going to add to this. So now you're adding at 11.50. You've got 2,000 shares, average cost 11.25. It squeezes up here to 12. You add another 1,000 shares at 12. So, look, this is a $30,000 position, a little more than if you actually took it with 3,000 shares. But nonetheless, let's just play it out. And your average is now like 11.40. You get the squeeze here up to 12.50 to 13, up to nearly 13.50. So,
Damn.
For real, on a 3,000 share position,
God.
your max profit on this could have been $6,000.
God.
20% return. That's a huge trade. Now, realistically, you probably would have sold some into this break over 12.50, up to 13, scaling out. Maybe you locked up $3,000, right? Still a 10% return. And you're doing that in a very short period of time. Now here, we get a pullback. But again, notice that the selling volume was a little higher. And then the green volume of this candle is also a little lower than the selling volume. So now we're a little matched in the supply-demand relationship. A little more selling, another little pop, and a little more selling. The price is above the 90 MA right here, but we're starting to kind of go sideways. All right, so this type of area gets a little tricky because usually I like this nice clean wave. When we start to go kind of sideways here, that's where we may be dealing with issues of hidden sellers up around 1350, possibly. I'm not 100% sure. It does, because I'm not looking at the level 2 right now. It does break 1350, and when it does, you get that move higher. This right here, this setup, wouldn't have been as easy to buy a dip on because of the way it dipped here, bounced back up, but then didn't go through the high. So you could have taken a starter, probably wouldn't have, well, you wouldn't have added because you wouldn't have had the high day break, right? So you wouldn't have added up there. It dips down again, it dips down again, it dips down again to about 1250. And I don't know if I would have taken a starter on this. On this one, I might have only done the breakout trade as it started to pull away. So let it pull away and then buy a micro pullback here under 1450 for the move up to 15, 1550, 16, and so on. You get another dip right here. So relatively light volume here. A couple light volume selling candles though as well. Green candles, sorry. Another higher volume red candle, and now we're getting into chop. So this is where it becomes a grinder. And one of the things I always focus on is the first and the second pullback. By the time we get up to the third pullback, it can work, but the risk is getting higher. Okay, so now let's look at an example here of another stock I traded this week. This one was really nice here. So, okay, so we're gonna get dialed in. So we've got pretty big moves, you can see, from $4 up to a high of $8.50. We started to pull away right in this area. This is sort of kind of when it began, if we go back here. One of the things I also am noticing immediately is like the MACD waves. So the MACD is open.
It's a lot of it just, I wonder where, when it goes over here, I wonder where he's going to say.
Dialed in. So this ended up really, the move was pre-market right here. And then the rest of the day, it ended up being choppy. And look at the open. Look at that high volume sell.
Damn.
There's no doubt the imbalance was to the sell side. There were people that were buying these dips, but it didn't make sense. Now the price is below the volume weighted average price. This just, it's not the right place to be a buyer here. Now, after hours ended up squeezing up again, but I don't usually trade in the after hours session later in the day. I focus on trading. My window generally is from about 7 a.m. until 11 a.m. each day. That's kind of the extent of my window for the most part. So I'll trade for a few hours each day, but I try not to overstay my welcome. One of the things that I found is that it is really hard as a beginner trader to know when to walk away, right? When to call it a good day. And I'm sure many of you have the experience of, doing well, having a nice green day, right? You're watching your P&L. Let's see. No, you're watching your P&L build up. First you're up, whatever, and then you pull back, and you're up a little more, a little more, a little more. And should you have walked away there? You kept going. Should you have walked away there? You kept going. Should you have walked away there? You kept going. Should you have walked away there? You kept going. What about here? Next thing you know, you're actually finishing the day in the red. That is devastating. And I've been there. So to help you,
I'm gonna give it a stack. I haven't been there just because, what's it called? I can't. Like, I literally can't trade more than whatever I have in my account, right? I only trade half. So if I would have hit my daily stop goal of the day, because how I prevent that from happening, at least for me, guys. So if I hit my max stop loss, once I hit my max stop loss, I'm done for the day. I dip, I get the fuck out, and that's it. There are some days where I overtrade. Sometimes I hit my stop loss, and then I keep trading. Then I take an extra trade and I lose more. But those are a little bit rare. I really don't take those a lot. Or I just lose a shit, right? I hit my stop loss, so it even goes further than my previous stop loss, and I lose even more. That's why I started trading half. I'm gonna start doing that a lot more now. Trading half of my initial profit. So go, like you said, a starter. I want to like add a starter and then add my other position. So add a starter, and then after I see it continue moving up and it's another clear sign of getting in, I'll enter my second position, and then that's called scaling in. So that's what I've tried. That's what I did in my last trade, and I think that's what I did also in my other trades too. It helps me a lot. Trust me, this actually helps a lot. I personally liked it, and I like it because I use that starter build to buy the dip, and then I want to buy the continuation. That's the next buy, is the continuation when it breaks the previous candle. And right, I buy the dip. My next buy is to break the previous candle. Boom, and then there you go. And then off of that, I do Dutchman, right? I sell like a quarter, half dollar to. So basically, how my works is basically buy a quarter, right, to a whole dollar. So 25, 50, 75, and $1, right? So if I see that from the chart, right, so if it's $5, you know what I'm saying, it dips $5, cool, bro. That's how I explain. But the point is, bro, everything he's telling you, bro, is basically what I do with my trading, bro. Or this, I try my best to leave this. Sometimes there's still a lot of things I gotta learn, but there is a lot of things he's saying is what I do when trading. Just haven't fully mastered it yet, but soon. Right here, he's gonna talk about more of what he's gonna say is very important as well. I just know that what he teaches us right now was really important, was buying the dip. And honestly, he's facts, but literally, I'm so glad he made this video. Like, I'm actually so glad he made this video, and I think it was perfect timing. I'm pretty sure he knew this was perfect timing, because right now in the market, it's buying the dip. Right now, it was buying the dip because, yeah, there's no really like good opportunities right now. And if you buy the dip, you buy a little bit early, and you see a little move, you can make some bread. I think buying the dip is pretty cool, man. I think it will help you a lot, especially in this bearish market. Buying the dip and then just buying a little bit of like the move, going back up a little bit, you can make some couple bread. You're not gonna make big winners, but you're gonna make some couple bread here. I feel like I was talking like fast as fuck right there. I think that's pretty much what he talks about. And yeah, he talks more about, he talks about the 1-to-1. It had to be 66% of the time, something like that, or 60% of the time. But yeah, man, pretty much that's it. I'm gonna close this off, man, and then I'm pretty done for the day, man. I took some great notes. I actually enjoyed the notes I took today. I think they're fantastic. Gonna help me a lot for tomorrow. If tomorrow there's a good opportunity, like I said yesterday, that wasn't really an opportunity. I still took a trade regardless because I saw something moving absolutely bonkers, and I'm like, oh shit, we might see something. Turns out there was nothing, man. Turns out, which is unfortunate, but hey, what are you gonna do about it? Right? So I pretty much got finished doing this. Oh shit. And yeah, that's pretty much it. Other than that, I'm gonna end stream. A good, successful day. I enjoyed my teachings today. And yeah, I think these two are really important that I need right now. I'll keep this shit right here. Alright, I'll see you guys tomorrow, right? I'll see you guys for tomorrow for trading in the morning.